Morning folks, just a quick update on stocks. I spotted this chart candle pattern going back to 2020. It's an interesting one. It's around about February 2020, middle of February, and you can see we had the series of reversal candles after this dip down. This is the Standard & Poor's Index, SPX 500 day chart, and we saw these two hanging man candles, bit of a hesitation candle there after a dip down, strong move up, then just leveling out, and you can see what happened. We had a little dip down again, sort of another hanging man candle pattern, but not particularly bearish, a little bit of a wick low on that one. Up again, just faffing around at those levels, and then that big bearish candle there, and this preceded a 35.7% drop going into February and March that year. That was the SPX in 2020. And we saw something very similar, which I pointed out in some tweets and in a couple of videos. I can just scoot along to where we are today, and we saw something very, very similar, which was interesting. And if you have a look at this, you can see we had a strong move up, a dip down, day chart again. Got some green lines and things drawn on the chart now, which weren't on the previous one, so it's a little bit confusing. We had the resistance level just above us here at about 44.70 to 44.80. I pointed out that resistance line. It's not only a channel top, but it's also the Fibonacci level, 78.6% fib, and also this previous high on the left-hand side of the chart. And we got up very close to there. We made a new high, a fractional new high on the daily chart. And then if I just go and have a look at that and cut off the candles that we've seen in the last couple of days, we see the same thing. We see a little hesitation candle. There's the first dip down, move up, slightly higher high, identical to the 2020 chart, and we saw a hesitation candle. I think that was Independence Day, and then the hanging man candle, then that bearish candle moved down, very similar to what happened at the top in 2020, and then another sort of couple of reversal candles, a one up, one down. That's where we are today, right now. This candle pattern here is almost a sort of textbook copy of what we saw in 2020, and that's where we are today. I'm looking to sell into this, and I'd hope we'd actually get up towards the top of this channel line, closer to that 78.6% fib, and into this gray area. We didn't get there. I was very, very close to selling. We were just about 10 pips away from my selling point, 10 points away from my selling point. I'm thinking currencies now, and we're now moving down. Today it just moved down in pre-market. It's an hour, about 2 hours before the market opens, US market. It's Monday morning, the 10th of July. Let's see how this goes. But we've rallied up a little bit in pre-market. I always like the pre-market direction to be the opposite direction of the way the day trades. So a rally in pre-market quite often means that we'll then follow up that rally with the first move down in the day, which would probably be down, and then a move bounce back up again, and then a resumption of that continued move down after the pre-market and the opening moves have completed. So that's very, very interesting on S&P. We're already short on NASDAQ. We've seen NASDAQ doing a similar thing, move down. We didn't make a new high, but we made a double top. And on NASDAQ, that's actually at a very key level as well. This pink zone that I've had drawn in here for months now, that's also the 78.6% Fibonacci level. We've had a 40% rally up from the bottom after a 40% drop from the top. So we've rallied as much as we fell during this last bear market, faffed around at the bottom here for a very long time. We've seen this extended move up based on AI and chips, Nvidia, and we've seen big rallies in Apple and Tesla and that sort of thing, all based on slightly hypey, in fact some would say incredibly hypey sort of markets in the face of all of the arguably detrimental financial news that we're facing at the moment, with recession looming, even though the Fed says it's going to be a perfect landing. Not even a soft landing anymore, but a perfect landing. We'll have to wait and see. It's Fed speak as usual. But there we are, right at the top of that pink zone. We're already short on NASDAQ from near the top and looking for a move down. Now, what makes me think that we could see some of this move down later on today and into this week? Not only are these charts incredibly overextended, but also we've reached very key levels on a lot of different charts. You've seen many of these before. Have a look at some of my previous videos. And if you want to see my future videos, don't forget to subscribe and like this video, and also tell all your friends about it. So we've got Nvidia, Apple, Microsoft, AMD here on the chart, and I could throw Tesla into that as well. The Tesla chart's very interesting. Looks also super interesting for a short potential. But the Nvidia chart is the one I'm looking at today. We're short on some of these already. The Nvidia chart that I'm looking at today is this one here, and in pre-market we've just moved higher. Remember, I like to see the pre-market move being opposite to the main idea for the day. We've got this trend line beneath us, this 20-day moving average moving up in pre-market, but look at these two last daily candles on very low volume, double top here, two spike highs or wick high candles up against that resistance level. And I could draw a very short-term Fibonacci in here. This resistance level here, looking at this sort of very short-term move, is precisely the 78.6% retracement of the move, the recent sort of high from that move down to the trend line, bouncing back up again, precisely 78.6%. Absolutely beautiful. 786%, if it works, and it doesn't always work, is the kind of last stand, the last chance for the market to reverse, continue in the direction which the fib's pointing in. And it's often a very powerful and significant reversal. And that is my favorite Fibonacci level, especially when you get a double wick top at the 786 that we're seeing on Nvidia. We've got to break down through this trend line, through that 20-period moving average. Let's just get rid of this because it's messy. Just wanted to point that out to you. Through this 20-period moving average, just beneath us, right on the trend line. And we've got this gap beneath us. If we get to the gap, we're going to have to contend with 3 different bounces off the support level. Fourth time, not always lucky on stocks and currencies and commodities when you're bouncing off or bouncing up into a resistance or a support level. The fourth time is often the breakdown. In fact, sometimes it's the third time, but once you get past 2, subsequent retests tend to become more and more difficult to resist, and the market might fall down into this gap, this massive gap that we left behind on earnings. It's got to be filled at some stage, and right in the middle of the gap, very interesting, right in the center, dead center, in this gap is the previous all-time high. That's going to form some support. If we do get to the previous all-time high, expect a bit of a bounce back up to retest the top of the gap, but I suspect that the all-time high, the previous all-time high, will not hold because gaps love to be filled completely and not partially, and this price will probably then move down to the bottom of the gap at about $318. So watch out for that sort of move. First of all, we've got to get through this first short-term support here. It's going to be a little bit tough. There's a lot of bullish momentum, a lot of hype. The AI craze has not gone away. It's still there, and anything could happen. But all these markets starting to look a bit toppy and a little bit difficult for this rally to continue, especially when you see volume dropping off like it has done recently. Take care. Have a fantastic trading day.